After taking off in the early 1990s, the Future Group hit its peak in 2019. It clocked a revenue of more than rupees 30,000 crore from its network of 1,700 stores that year. Fast forward to now, and the group is under a burden of a massive 32,840 crore rupees debt. The downfall was rather quick. One of the group companies that is under insolvency process, Future Retail Limited, registered a loss of rupees 3,180 crores as of March 2021. In the year 2020, the group had registered a profit of rupees 33 crore, and its peak profit was in 2019 at rupees 732 crores. So, why have things come to such a pass?
What he did was he expanded too fast. He used mostly borrowed funds to expand, which is a problem in retailing because where the margins are small and your cost of borrowing is high, it doesn't leave you too much degrees of freedom in terms of success. Not only that, like in the license, Raj, he tried to stop the international competition from coming in, which is a problem. Why? Because when you stop international competition from coming in, you're not developing your own capabilities in your organization to compete with the best. Then he went into many unrelated businesses, at least the insurance business kind of thing, where he had no competencies at all. He did not hire the best talent to build the deep retail competencies required. And the problem was he didn't need to go into these unrelated businesses because retail was a big enough opportunity in India. Of all industries that I know, retailing is the most cutthroat competitive business. In retailing, we talk about the wheel of retailing, which is that retailers succeed, but over time they fail because they let their costs go up too much.
I think the key reasons for Future's downfall is really the rampant and unrelated expansion. One level insurance, cinema, and the other is rather rapid expansion. So I'm not sure they really checked the potential of an area. The other, I think they quickly went into too many retail formats. That is one thing that certainly was not well thought through. And of course, I think the big tickets was the onslaught of e-commerce. The last 1 decade, the rapid growth of Flipkart, of Amazon, and then of course the competition that came, from new entrants, Reliance, of course, Star Bazaar from the Tatas, Spencer's, and of course some of the larger global retail formats that also gained entry into the country. So in effect, Future was not able to, hold on against all this, and accumulated, unsurmountable debt that really grew too large for them to service.
3 of the 19 companies under the Future Group are undergoing insolvency proceedings under the Insolvency and Bankruptcy Code. These are Future Supply Chain Solutions, Future Retail, and Future Enterprise. The bankruptcy case against the company has been filed by multiple creditors across the country. To come out of the debt, the group had struck a deal with the Indian behemoth Reliance Industries worth almost rupees 25,000 crores in 2020. The deal, however, was called off last year by the Ambani Group. A prime reason that prevented the deal from being materialized was the tussle Future Group was engaged in with the e-commerce giant Amazon. Amazon, through its earlier investment, had 3.58% indirect stake in Future Retail Limited. When the deal was signed between Reliance and Future Group, the e-commerce giant objected, citing a shareholder disagreement. Reliance, however, found itself in a sweet spot even though the deal did not go through. It took over 830 stores of the Future Group, which operated Big Bazaar, FBB, and Easy Day. This takeover was a result of non-payment of dues by the Future Group. Where does the Future Group stand today? Is there any hope of its return?
To use of cliche, they really have no future. They're left staring at an abyss. Having said which, I think Mr. Biyani has truly been a pioneer in the retail trade in India. So the deep knowledge and insights that he has are truly invaluable. And therefore, if they make a fresh beginning, it'll have to be from scratch, really getting down to the basics. And I think they would have the potential to do that.
So what stands in the future is that I think, offline retail growth rates that way have converged. But I think the only potential therein is online. So if they're able to kind of innovate online, have some app, have a better user experience, I think they can basically, try and, do things differently. But we don't see that, as a probability for now. I think the Future Group may continue to be a laggard as compared to other conglomerates like Tata and Reliance, which have scaled up the omni-channel route, online and offline both put together.
Experts believe that Biyani's future group might have been one of the leading retail brands in the world had it not diversified into unrelated industries. Along with aggressive expansion, the group could not withstand the competition from growing e-commerce in India. With 3 major companies under the insolvency process, the future remains uncertain.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.